very humbling thought experiment. Even if you knew exactly what was going to happen in the world, you still could not reliably time the stock market. And the reason that is because the stock market a lot of times is not just pricing events, it is very much pricing reactions to events. And those are far less predictable. If you think about recent history, in early 2025, tariff announcements created genuine economic uncertainty. If you had known tariffs were coming, you might have sold everything, expecting a crash. But markets initially rallied on certain announcements, interpreting them as negotiating tactics rather than policy. Then they cratered, then they recovered. So knowing the policy on face level didn't tell you how millions of other investors would interpret it. And this is the fundamental problem with timing the market. Markets are second-order systems. They don't respond to reality directly. They respond instead to the gap between reality and expectations, which is very much filtered through the collective psychology of every other participant. So you're not predicting events, you are predicting predictions. Even professional investors with enormous research budgets and sophisticated models consistently fail to time the market. Study after study shows that the vast majority of actively managed funds underperform simple index funds over time. If the experts can't do it with every advantage, what makes you think that you can do it as well? And the math really just makes it worse. Missing just the 10 best days of the market over a 20-year period can cut your returns in half. Those best days often come during the most volatile periods, exactly when fear would tell you to sell. So timing requires being right twice, when to get out and when to get back in. And almost nobody is able to nail those consistently. The current market environment feels especially unpredictable if you think about tariff whiplash, policy uncertainty, mixed economic signals. So the temptation to wait it out, to time the bottom, to be clever can feel very overwhelming right now, but it's important to resist it. A lot of times, the most boring strategy wins, which is to invest consistently, diversify broadly, and stay invested through volatility. You cannot predict the future, but you can definitely predict how everybody else will. Because the thing is, you can't predict the future, and you definitely cannot predict how everybody else will react to it.